Hi friends, Simon here from InformedTrades.com. On the screen right now, you're looking at a chart of the ratio of gold to silver. And if you see in this red region here, we highlighted this as the ratio reaching a really key resistance level back in the end of August. And that is a potential short opportunity. The market has fallen since then. The gold-silver ratio has fallen since then. And now we're at 73. Now there's still an opportunity, even though a big part of the move and the best part from a reward risk, the best and safest time to short has passed us. One could still argue that it's still time, or there's still enough time to put on a acceptable trade. Now, if we look out to the weekly chart, which I just zoomed out to, you can see the pattern that we're in, this megaphone pattern. Could set up a target at around 64. We also have the 200 exponential moving average there, 200 week exponential moving average there, of around 64. If we were short here at 73, targeting 64, that gives us 9 points as our target. And if we put our stop, you could put your stop a little tighter. You might put your stop at 77 or so. Personally, I still think there's a chance. I want to put my stop at 81. So that gives you a reward risk of a little better than 1-to-1. Not great. Definitely would have been better to enter here, but it is something to consider. Also, if you could wait for a pullback, if we get a pullback to 78, that could be a really good opportunity. And something that also should be noted is that there's pretty big support here, 67. So that might be a better level to target than 64, although we could also make our way to 64, especially if we get a prolonged gold and silver rally. But if we target 67.4, 67.5, and we're able to enter at 78 with our stop at just above 80, 81, let's say, that gives us a reward risk of almost over 3-to-1. So that's pretty good in terms of standard reward risk ratios. Entering at 77 or 78, targeting 67.5, putting your stop at just above 80, it gives us some good opportunities there. 81 maybe. Reward risk ratio. Depending on how you play the numbers, that'll end up being between 2 and 4. That is sort of about it. Also, just in case you're not familiar, shorting the gold-silver ratio means you're shorting gold and you're going long silver. So that way you don't have to speculate on any macroeconomic trend, but rather you're playing the relationship within gold and silver. That's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. If any of this information is unfamiliar to you, also check out InformedTrades, where we have a huge archive of articles and videos to help you learn. Best of luck in your trading and investing. We'll see you next time. Take care.